Welcome to TheoTrade. This is Don Kaufman. You are watching January 25th, 2016. Here we are, the Theo evening video. I'm actually recording this with just about 14 minutes to go to the close of the trading day. You know, you thought on Friday we were getting out of that, didn't you? Yeah, well, guess what? Think again. The S&Ps are giving back everything that they predominantly gained on Friday, right back to a very key number inside of the S&Ps that we've been discussing day in and day out over here, which has been the 1871. So if you do follow some of the Theo videos from kind of day to day, there are a handful of kind of support and resistance levels that we've discussed as of recently, and I'm going to take you over to the S&P futures from the SPX specifically here to discuss those. And those two key levels happen to be none other than right here. We drew them, of course, early last week, 1871 to the downside and 1911 to the upside. So again, this being some key areas, and we're kind of getting pulled right back down into that 1871 level. But this leaves us in an extremely difficult position as traders. And in the difficult position over here is that, again, every ounce of buying has been met with sell-side activity. And some of the sell-side activity, and one of the reasons I'm recording this video with 10, 15 minutes to go to the close over here, is to show you what that really kind of amounts to. Is that volume today? It's one of the first days that we actually saw volume in the S&P is not too extreme, but volume is exploding. Not just accelerating, but kind of exploding as we start to trade to the downside. Again, there's been this big kind of confluence of trade. You can see my line on my screen over here, right at about that 1871 level, which again we drew days ago on the screen, but has become like, you know, this preeminent price point that we continually saw like support at. Now we're seeing tremendous, support and both resistance at that 1871 level, but volume comes roaring back into the marketplace. This is nothing but the obvious. Okay, so you have the S&Ps that gave back most of the gains of the other day. I look down the screen, the volatility once again, and see, the VIX, neither here nor there. I'm looking at the volatility futures. The volatility futures once again are taking off to the upside. Again, it's the obvious. Bonds rallying. I don't see the bonds moving up nearly as much as I would have expected with a 30-point down move kind of late in the trading day over here. And again, the day is not over yet, but there's a couple of areas concerned. Great. We see oil getting hit back again. The energy sector itself today is getting hammered quite substantially over here. And if you look at the energy sector, there's a few ways to look at it. You can look at oil, that's great. But when I think of the energy sector, I think specifically of the XLE down at about 4.5%. But oil itself is seeing over a 7% decline, coming back under that 30 level. Again, under that 30 level over there. But there's something much more, I think, ominous going on. And I think the point of watching some of these videos over here, this isn't just for trade setups and so forth, because again, I think any trade setup that I'd give you right now is going to predominantly be selling out of the money premium. Because let's just be completely frank, you have to recognize that in the midst of volatility, predictability kind of gets thrown out the window to a degree. So you have to take a stance. And that stance is, well, I'm going to sell out of the money premium and just let some of that premium kind of come in. And that's what I'm doing with a lot of my positions. I try to keep the theta north of a few $100 a day and just kind of let that premium and what I kind of call harvest premium over there. But as I said a moment ago, there's a much more ominous area in markets that I've kind of picked up on over here. And it's to do specifically with the financials. Now, there's a couple things that I'll look at within a given day. I'll look at advanced decline lines. Now, right over here, it's the S&P 500 sector indices found on thinkorswim. It's under visualize. So it's showing, the financial sector, it's a little bit weak. Again, it's kind of the obvious, right? It's down over 2%, with the S&P is only down 1.5%. The NASDAQ is actually faring a bit better on the day than are the S&Ps, but the financials kind of stand out. Energy, well, Heck, that doesn't surprise any of us. So I looked a little bit deeper into the financials. And as I started digging deeper into the financials, I just, threw them up on the trade tab because I've got some fairly substantial positions inside of the XLF. I'm still short the XLF. What am I short? 5,200 shares of the XLF over here. Neither here nor there. The area that I picked up on the financials that's a bit more ominous and that's starting to concern me is that the volatility, it's really high with 4 days remaining, with 11 days remaining. And you're like, oh, okay, I'm not really entirely sure what that means. Well, a 35% implied volatility. In an equity product, it wouldn't even cross my mind. Like, whatever. Equities trading 35 vol, nothing. Okay? But it's the financial sector. Okay? It's the entire financial sector. And most of the major financials have already been through their earnings announcements. We're starting to feel the financial sector, it's getting a little bit heated out there. Okay? There's some underlying risk that is imminent, and it's being displayed as such. But again, you got this 35%, and just compare it, because you might not necessarily know, like, all right, 35%, volatility over there. But compare it to something like the spiders. Why do the financials have considerably more risk on the table right now than does the S&P 500? The financials, again, the second largest sector inside of the S&P 500. So what's the other really large sector inside of the S&P 500? Tech. Okay. I mean, you can look at tech as just going over and like looking at the Qs or something. So, here's the NASDAQ 100. The NASDAQ 100, what is it? It's Amazon, it's Google, it's Apple, it's Facebook. Okay. And its volatility is elevated. Okay. But it makes sense that the Q's volatility is elevated right now. Well, why does it make more sense? Because we have earnings coming out this week. In fact, tomorrow, Tuesday, after the close, we have Apple coming out. We have Facebook after the bell on Wednesday. We have Microsoft. We have Amazon. Okay, we have most of the components in. All right, the Qs are going to have earnings, hence the elevated volatility level. The financials, though, seem to be an area. Okay, let's call it at this point, some turbulence is imminent inside of the financial sector, and that's really what's being displayed. So for me, all eyes on the financial sector. Now, okay, we have some major announcements coming up this week. What are some of the major announcements? Well, the FOMC is going to have a meeting. Okay, but again, we're not seeing that huge risk baked into the broader S&P 500. It seems to be impacting, okay, the financials substantially more than overall marketplace over here. Yes, there's some GDP numbers coming out. There's even some housing starts numbers coming out a little bit later this week over here. But again, to see 35%, all right, implied volatility seems exorbitantly high. Also, the implied volatility percentiles up to the 63rd percentile. It's getting a lot more extreme out there. I'm not seeing anything crazy, though, in terms of the options trading. We'll look and kind of keep you abridged of that situation. All right, so not only have we given back most of what we saw on Friday, we're seeing sell-side activity across the broader market over here. Again, Apple does have its earnings after the bell on Tuesday. We'll look at some Apple trades kind of earlier in the morning. The expected move in Apple, just so we're all kind of clear about this, it's about plus or minus $6.70. That is not an unusual expected move for Apple. Nothing crazy going on inside of Apple. And how do I know that this is not an unusual expected move in Apple? Is I just went and looked at it in the last earnings period. So I'm over here on Think Back now. On thinkorswim, and I'm just looking at the last earnings announcement. The last earnings announcement happened on none other than October 27th, 2015, with 3 days remaining. You could see about a $7.34 move, but that was on a $114 stock. Again, on a percentage basis, we're pretty close to where we were the last earnings period over here. Although, remember, anything's possible. Again, Apple trades will be coming out tomorrow, kind of early in the morning when I'm on. I'll talk about Apple and how we can position ourselves just a little bit around there. When you're thinking of Apple, though, think of the expected move. When you're thinking of the expected move, I'm actually going to build a couple of trades, again, expressly around that expected move tomorrow, live in the chat room, or catch us on the archives over here. Another and final area that we're watching, okay, again, so we've got bonds bid up. Bonds are actually threatening the 160 level. Okay. Another area that I watch pretty intensely is kind of like short-term volatility. There's a couple of different ways to watch volatility. You could look at the VXST. That's like a 9-day VIX. Okay. But rather, I don't necessarily look at the VXST. Rather than look at that, we're going to look at the SPX. We're going to look at the SPX, and I'm just going to go in and dig into the expected move, okay, which happens to be, you know, $43, almost $44. What's interesting about that is this morning, okay, prior to the open, the expected move is right around $44. So now we fast forward an entire another day, okay, and we're still at about a $44 expected move. Volatility has expanded quite dramatically with this particular sell-off, meaning, again, risk once again is here. Risk is imminent. You've actually got short duration volatility well exceeding longer duration volatility in most cases out there, including the volatility futures. Again, stating that risk is much higher now than risk would be just a few days or a few weeks ultimately out. Again, out of the FOMC this week, I'm not expecting much of anything. And I'm actually going to come on during the FOMC announcement, which is going to be Wednesday, okay, right in the middle of the day over there, Wednesday. And again, always check your time zone, check your calendar. Know when all of your major announcements are due out. Again, there's a couple of big announcements this week, but FOMC is kind of taking the driver's seat over there. That's 12 noon Mountain Standard Time, so which is 1 p.m. Central. 1 p.m. Central will be the FOMC meeting. Again, we'll come on live during the FOMC meeting, maybe even place a few trades prior to that. Again, if you're looking for positions right now, you need to be thinking of selling premium outside of expected moves. Again, selling premium outside of expected moves. To discuss that in a little bit more detail, additionally, this coming Wednesday, surviving the extreme volatility. This is our first class here at TheoTrade. Join myself, Don Kaufman, Wednesday, January 27th. That is 8 p.m. Eastern Time. Okay, 8 p.m. Eastern Time. Class should run about 2 hours, about 8 to 10. There will be full PowerPoints. We'll be happy to share those PowerPoints with you just after the class. We'll actually put the PowerPoints right along with the archive, put them in a nice PDF format over there. You will have everything. Again, that's going to be right there in the Theo, okay, chat room. So join us right in the Theo chat room. 8 p.m. Eastern Time, Wednesday, January 27th. Surviving the extreme volatility. There's no cost, of course, for the classes. Okay, so join us this Wednesday or catch us in the archive. Thanks a lot, everybody. Here we are, just about to close the markets. 25 seconds left to play in the period. We're going to be under that kind of critical number, it appears, of 1871. Thanks a lot, everybody. Have a good trading session tomorrow, and join us right here at TheoTrade. Bye-bye.